So financial investor is basically like a venture capital fund or an angel investor who's investing for a financial reward solely. A strategic investor is somebody who's not looking necessarily for an early exit, but they're looking to, they probably got a connect in their business with you, which is strategic. So maybe a larger gaming company, or let's say it could have been in the States back then when Jamdad and the mobile gaming example was Sprint invested in Jamdad. So they were a mobile company that was saying, okay, this is going to be the next big thing, so we'll get our foot into the door and this could be great data revenue. So that's a strategic investor who's not looking just for the financial reward. The good thing about strategic investors is that they have longer cycles. They're not looking to exit. A financial investor typically has a fund. The fund always has a life. Okay, so if a fund is always set up with like a 5-year life or 8-year or 10-year. When you're coming to the end of the life, they have to sell. And so they're going to force you to exit their stake. And so when you're in the early stage of the fund, you've got a long runway. But this is an important thing to check. If you're raising money from a fund, ask them, what's your fund's life? If the fund's life is another 1 year, he's going to want, and he's investing from that fund, he's going to want to start exiting. So if they're going to launch their next fund and putting in money from there, you're okay. But it's important to figure out that fund life. Now, if you're really early stage and raising money from an angel, see if the angel is really well, has got enough money to not be stressed about trying to pull out the money from here. So how much are they putting relative to their real wealth? It's okay to ask that. You can check them out, Google them, see where they made their money, how much they're worth. So if they're putting 15 lakhs and they're worth freaking, 20 crores, it's okay. There shouldn't be too much pressure. So for financial return, early exits, and they will look for that financial return, strategics, longer term, and some strategic benefit with your company. No, actually the other way around, because you should try and raise the money, because without the money you will die in all likelihood. So raise the money. Preferably raise the money from a financial, and then at a subsequent stage you can bring in a strategic. Too early with a strategic, because the other thing is the strategic will start trying to drive your vision. So if you've got a strategic who's going to listen to you because they really respect what you're driving, that's fine. But if you have a strategic who thinks that they know what to do, they're going to tell you how to react to what the market's doing, how to design your game, how to do the monetization, and you probably don't want that. So strategic a little later in the game.
Hey, Samir. Yeah. So who are some of the...
You've done this, man.
Who are some of the investors in India who have experience in investing in gaming industry, especially the global, who know the global play? And because as far as I know, most of the investors in India would be on the dormant category, would put the money just because it's cool for investing in gaming.
Not a lot of raised from the Indian Angel Network and K, right? Whom did you raise from?
From Bloom and MA.
From Bloom and?
MA.
And Mumbai Angels, right. So, there aren't...
It will be helpful, you can tell who are the investors so people can look for them.
Well, I think if you just... the way to do this is probably look at the large companies abroad that have raised money and see their investor list, okay? It's not important what I rattle off here, it's for what you're looking to do. So if you're doing social gaming versus if you're doing, or creating a platform, if you're creating a backend of some sort, see, because in the US, in the Valley, the funds are super specialized. So if you're raising money from there. The point that I think that you're alluding to is in India, there isn't that pedigree, because let's face it, we're early in the game, right? This is, GDC is maybe 4 years old, and it's now, last couple of years have been 1,000 plus, and the indies are coming up, so that ecosystem is getting developed. So don't expect to get too much value. Now, even if you find a fund that has backed Playdom or Zynga in the past, the question is in the fund, who is sitting on your board? That's really super relevant. The person who's actually, because you're going to deal with that person, it's like, so what if they have a credential that somebody in the US did this deal? It doesn't matter. What matters is, so again, between two funds, one that actually says that we've done this deal, we've done 5 gaming companies and they all went to like $100 million to $1 billion exits, versus the other guy who hasn't had the exits, but is a passionate gamer and knows this stuff and maybe come out of, and is an entrepreneur in residence who kind of knows this. I would probably go with the second, because you can't, how often are you going to leverage that partner who did that deal? So like Norvest had Tim Chang, right? And he was like the dude who'd done Playdom, and he'd done 2-3 other, I think he did NG Moko's deal also. But you know, in India, you'd probably get Tim onto the phone maybe once in 2 months or something, and he's running around doing 25 other things. So just having a fund that's invested is not what you're looking for. That's a good to have. The guy who's sitting on your board, how do you gel with him? What's his view on your business is very, very important. And sometimes you get screwed up because the guy who did the deal left, and now there's a new guy who actually doesn't believe in your business. And that happens many times in funds, and then they're not backing it. They're not doing the follow-on round. There's not that much passion. So the way to do this is check out what you're doing. If you're approaching US funds, then and backwork that. In India, you don't have too many options. So you would go exactly the route that you've got. You'd go to angels, you'd go to, and I don't think there's that much appetite right now for Series A in India amongst the funds, unless you've got something that's really, really cracking and path-breaking to show. In what situation would the drag-along clause be used? So the drag-along clause is basically there to protect the investor from being stuck in your company forever, right? So they've made this investment as a financial investor, and they want to make a financial return and exit. And every time they bring a possible buyer to you, you say, no, not this guy, wait, we're going to get, it's like Snapchat now apparently turned down the $3 billion deal, right? So now maybe they say, no, there's an upside. Now things don't go well. See, investors, you have to remember the other part. Just like you lose control whether you give away 10% of your company or 51, an investor is your best friend when things are going well, and 9 times out of 10 that investor will become an asshole when things are not going well. This is their job. If things aren't working well, they've got to cover their back. And so the way they approach you and the way they deal with you will seem extremely harsh, but they're doing their job. They may have to invoke terms and conditions and saying, get these approvals, you can't do this, you can't change that, because now that's the kick in of the bureaucracy. Won't happen with an angel as much maybe, but with a fund that tends to happen sometimes. So when does the drag along get kicked in? They've been in the company 4 years, you've turned down 2 buyout offers, and they say, no, listen, we're not going to wait. Here's a strategic. You don't want to sell to that strategic, but that strategic wants 20% of your stake. So they could just drag you along and force you to sell 20% of your part. So maybe you have 40% of the company, and they're forcing you to sell your 20%. It may be a valuation that you think is not good enough, but that's not your call now, when the drag along gets invoked. But just to go back to why that doesn't get invoked is because the guy who's buying you knows that you hate that it's happening. And so they value you, they're going to figure out how to kind of come to a middle path. If you're not valuable and they're going to bring in their own team, you'll get dragged. But that's a rare situation.
In case of folks who've had a startup around for just a few months, they are clearly inexperienced in the industry. But assuming that they've had a good semi-professional gaming experience since they've been young. So does that count against us? Because in your slide you mentioned that investors look at founder backgrounds. They see if you're from the gaming industry, they see your passion. So how does that work?
So your question is, just if I understood that correctly, that if you don't have a background in gaming.
No, what I'm saying is, like, we have a startup, and we come from a semi-professional background. But our startup has been around for less than a year.
What is a semi-professional, if you can just elaborate?
We've been playing an MMO called World of Warcraft, if you've heard of it. Okay, so we've been on many forums and panels when we were playing the game.
So you were not professional game developers, and now you've become a professional game development company?
Yes, we were professional, not from the development aspect, but from the playing aspect.
I understand your question now.
So does it count for us, or will that be held against?
So it's always a package deal. Okay, I don't think there's one thing that is that will win you the fundraise at the terms that you want. So it's a package. And this is kind of like a marriage, right? So if you're looking for multiple qualities in the company that you're looking to fund. So if the founders have a lot of pedigree in this space, that's a comforting factor, obviously, because you would assume that they know the pitfalls. There's no guarantee in anything. That's why you're investing in equity and not debt. But you would assume that, so that's a plus point, right? Now, if you don't have that, you can compensate by maybe the genius of the thought of what you're going to do and showing the prototype of it. So I don't think it's if you don't have the other bells and whistles or the other supporting factors, then certainly it's a weak case, right? So what would somebody find interesting? If it's just the idea and even lacks the prototype, then you've got a weak case. because you don't have the background. There's like a gazillion gamers out there. So just because you're now coming into it because you've been a gamer doesn't mean that you can actually pull this off. Have you had experience even outside in running a startup? So let's say that you ran another company that did application development that had nothing to do with gaming. But the fact that you have startup experience is the other thing. So you may not have game experience, but you have the experience of creating a team. Very important to create the team because they know it's not going to be a one-man show. So if you show a background in here's the 3-4 things, they also look at, they'll often ask you, how do you know each other? Why is that question being asked of you? Because they want to see, there's going to be failure. If you have 4 founders, somebody's going to get married and feel the pressure and leave, and somebody's going to have an argument about equity or the way things are going and leave. Now, they want to see how cohesive, have you been around together, have you done stuff together, or is the team going to start breaking up and then therefore lose value? So there are many things that will go, that can be, so you just have to be conscious. If we don't have the background, let's take the volume up on 3-4 other things, but overall it's a package. Go ahead. I can hear you, just if you can just be a little.
Are they willing to, invest in global opportunities also from an Indian team?
Are India-based investors looking at companies that are focused on India-focused markets, or are they looking international, right?
Right.
Okay, I'm going to ask you this. I mean, and those of you who are in the gaming space, I think it would be fair to say that a good game is a good game is a good game, right? I mean, even if you're doing something that is based around something that is totally Indian in terms of the mythology, etc. Let's say that World of Warcraft is built around Chinese mythology. I mean, all the Dungeons and Dragons game, whatever it is. So the game's going to transcend this barrier, and because and I don't think in a game even the language is an issue. We often got told that if you start porting your game in the 45 different Indian languages, your sales will go up. We never did that. I mean, we did a few. When we used to sell into Europe, we used to port into eFigs and all of that stuff. But I think the point I'm trying to make is that people are looking for a good product and a good game. You may think that you're focused over here, but when you're so early, you actually don't know what that market's going to be. So if you have something that is not going to clearly work outside of India, that's probably not such a great thing. If you're going out to make a great game, my sense is, because now the platforms, earlier when it was all telco based, the distribution model was telco based. Okay, and I'm thinking of mobile now because as you all know what's happening to the console, and not so much for the online space, but now that you're doing mobile and you have the global distribution platform and you can get that global footprint without having to be sort of riding with another aggregator, why wouldn't you make something that is larger scale? So if you're going to say that I'm making something that is only for the India market, you've got to have a really solid case as to why that will work. Otherwise, I'd say focus on making a great game and something that will straddle international markets. You can have a focus, but there's no point in saying this is only for here.
But India-based funds would be willing to invest in that? Something
that's global or just India?
Global.
Oh yeah, I mean, see, it's not a question of why India-based. Any rational investor, if you're saying that your product's going to have a larger footprint than something that is very specific, it's just it's nice to have because it's de-risking it to some extent. So actually the bigger challenge is are there investors at that Series A level? So if you're going to raise Series, and Series A is typically defined when you're crossing maybe $400,000-$500,000 in Indian terms. Okay, so when you're trying to look at 5 crore plus raises that Series A, there isn't a market for that right now. It's going to be very hard to get. On the angel side, because a lot of the companies that have been angel funded off late are, like I said in the beginning, admittedly it's still early for the full proof of concept. They've done great stuff, but nobody's had an exit. The day you find 1 or 2 people getting good exits, there'll again be a flurry of activity. But right now, the angels are kind of tapped out. And I'm experiencing this right now because I am an angel in another gaming company. And, it's not as much of interest that I would have thought would come to the market. There's a lot of interest because of this particular team, but it isn't as hot as it was, I think, maybe a year ago when you guys were raising, or a year and a half ago.
I had a specific question on the mobile gaming particularly. Given that the mobile games in general have a very short shelf life in relation to, say, utility apps like Uber and other ones, how does that affect the investor's decision to sort of go and invest in a single game versus a gaming platform?
It's a good question. So when people are investing in a company that is doing the content business overall, so if you look at, I'm going to go a little macro here, media companies overall get valued lower than other product companies because investors believe, and I'm talking about like the large media companies listed, NASDAQ, in, wherever, internationally, India, because investors believe that it's a hits and miss game. So they're going to spend $20 million making a movie, and then last question. They're going to spend $20 million making something, and then that doesn't work. So they look for portfolio. So if you're going out there with one product, it's a very small chance that people will bet on that. If you're going to go out there and say that now with this fundraise, I'll have 6 products out there, and by the way, in the absence of these 6 products, I can flip back through because now the ad-funded gaming market is good enough. In our cutback model, we'll still be able to survive till we get the right game. I mean, everybody knows the story, right? How Angry Birds was the 41st bloody game, and how Airbnb was about to shut down the next day, and then their business picked up, and then they got bought out for $1 billion. So the point I'm making is that you have to have a portfolio. Investors will not invest in one thing. Now the platform then has to have clients. So you can't just say, okay, now I'll do a platform, and I've seen that another company that I'm invested in which has a platform, and then you have to prove the 5 marquee clients. Not good enough to have some early stage companies that are barely paying you anything. You have to have 2-3 marquee clients that are on it, and then you kind of get there. So it's a trade-off.
Hi.
Can we take one more? All right.
Yeah, my question is, suppose you have a good idea, and you approach a strategic investor for that.
Yeah.
What if he refuses your idea, turns it down? How do you ensure that your idea doesn't get encroached upon?
You can't. You can't. But you've got to live in the belief. So a lot of VCs get asked this question, please sign an NDA and I'll come pitch you. And most of the times they get shown the birdie. The reason for that is that investors are, everybody knows what the birdie is, I guess. The reason for that is that investors are meeting, they're seeing, I don't know, some of them are seeing 1,000 plans a month. They can't be signing an NDA because you'll come back and say, this is similar to what you saw and therefore you've copied my concept. They're in the business of saying that, so nobody's going to sign that. It's dangerous to go to a strategic, which is why I'm saying for an early stage, avoid the strategic. But take solace in the fact that if your idea is, I believe in that a lot of innovation is in execution and not just in ideation. Sometimes people give a lot of focus around innovative in the idea. The innovation is massively in how you execute it, right? I mean, that's the whole thing about live gaming or live ops in gaming is the tweaks that you continuously make to it, right? So if the innovation is in the execution, so what if they had the idea? It's like telling somebody I'm going to make a romantic comedy film and giving them like the 5-line description. That's not giving too much. So when they get deeper and hotter, now if you shared everything with them, they could take your idea and they could flip it, but the chances are that you've got to have the confidence that you can do it better than anybody else. And that's the irrational optimism with the paranoid failure, so you've got to live with that. But if you're scared to pitch it, you won't be out there. But strategics are a bad idea that early in the game. All right? Thank you very much. Thank you.
Thanks so much.
Thank you. Thanks.
Ladies and gentlemen, let's break for lunch. The lunch has been laid out there. A keynote on revolutionizing the gaming and entertainment. Anshu, the stage is yours.
Hello. Hello. Thank you so much. Good afternoon, everyone. We're just trying to, as you could see, some of you were sitting here before everybody walked in. We were trying to set this whole thing up. A very warm welcome. First of all, thank you, NASCOM, for inviting us here. I lead the Xbox business at Microsoft, and a lot of people think that, including myself, that the whole job is just about playing games. I told my wife yesterday when I was leaving from Delhi that I'm going to a NASCOM event, and she said, what are you going to do there? And I said, this is, the game developer conference, and I'm a speaker there. She said, I understand the game part of it, because you keep doing that. Developer, you can't even teach your son maths right now in 7th grade. What are you going to talk to them about? And that really got me thinking, really, just in terms of the sheer knowledge that is sitting inside the room, I shouldn't be here. because I've had very little to do with developer community. I hardly, can memorize all the developer tools and all the things that you guys talk about. What I do know about is my company, Microsoft. What I also know about is a little bit of a strategy that we have. What are we trying to do in the market? And what are the things in a very simple way which might make sense to all of you. So just before I start, just wanted to play a little bit of a video. Hopefully it will work with the audio sound. Why was it important to play this video just at the beginning? One, it just adds a little zing to the whole presentation. Ideally, there should have been lights flashing here, and I would have come just when the video entered, but we couldn't plan that out properly. But really, it's very important for everybody in the room to understand where we come from and what are we today, right? Microsoft has actually gone through a massive transformation. It is right now going through a massive transformation. And our whole strategy has changed. A lot of you would have heard those things in the media, in the press, announcements that we made about the organizational structure, the way we see our future of the company. But what we clearly are not today is a software company. We used to be a software company. We were all about the Windows and Office and a whole lot of software that we made both for the consumers as well as for the enterprise. But today we're not just the software company. We are in fact what we call the devices and services company. And it's extremely important to understand this concept because as developers, as partners, as consumers, you really need to understand the philosophy from where we are now going ahead with. And when you talk about devices and services,